All right, guys, what is going on? What is Gucci, gang? What is Gucci? Let me see. TP Tuesday, Take Profit Tuesday. No, I ended up doing something a little bit different today. Something a little bit different. Not ready yet. Jordan, we're not ready yet. I got ahead of myself on the title. We'll have to wait. But, you know me, dog. I gotta have fun with it, man. I gots to have fun with it, baby. You know what I mean? So, yeah, I'm going to talk about all the details today. Just, we got to give this a few minutes. We got to give it a few minutes. So yeah. Anyway, let's do our intro real quick, and then I want to briefly cover, and by briefly I mean very briefly, what we talked about yesterday, and then we'll get into today's title. So I know I'm just a comedian. Anyway, what is good? Eric, Jorks, Fernando, Torty, Adam, Lewis, Eminem, H, Julius, Danielson, Mason slapping around, I think it was ES today. Or S&P, you know. So good job over there. Jordan D in the chat. New York Stock Exchange was dirty, but found a sell setup. Got out as soon as possible. At regular trading hour lows. Thank God. Praise the Lord. I don't know if you could tell. It's on my hoodie. Praise. Which side? This side. Praise the Lord, dog. Praise the Lord. Amen. So we'll definitely try not to cuss today. No promises, but I'll try. All right, I'll do my best. I'm a sinner, okay? I don't know what else to tell you. Gotta trust the trade. VE before the move in ES. Well, break even's better than a loss, my friend. It's better than a loss. Was good, Sergio. Was good, twins. Cool. So, all right, let's go over there to yesterday's Word document. We'll do that really quickly. It was good, Patch. We'll do this very quickly because again, we went over this in depth yesterday. I don't want to go through this whole thing again. If you did not watch yesterday's stream, I think you should. It's not saved as a member only video, but you know, it's on a live tab from yesterday. And this is what we talked about. The obstacles, the way, a brief discussion on trading struggles. Again, today's the 18th. This was yesterday, the 17th. And so we went through a few different ideas, but 8 different ideas and a little bit of additional commentary. We talked about to end the need for rushing success, rushing to get back into the marketplace, reacting emotionally to trading losses, or you could even act emotionally to a break even, I'm sure, especially if it runs your direction. Right? And we talked about a little bit on the Successful Traders Trio and how it may not be a strategy problem, it may be a discipline problem. Right, and to not force setups that aren't there. We talked about living a disciplined life, so that way you are better able to be disciplined in your trading. Right, drop some ones in the chat if you guys had a lot of fun yesterday, if you got a lot of notes yesterday. We talked about doing the small things like making your bed, returning the shopping cart. I don't know, finishing a book you read. I've got a few more of those. I've read 19 so far this year. Yesterday was 18. I got it to 19 last night. I finished Mastery by Robert Greene, which was a wonderful book. And again, I didn't start it this year, I don't think. I may have, I'm not really sure, but it's a book that I finished this year. So that's why it's such a high number compared to other years for me, because you know, you could read no books in a year, but you could read like half of 20 of them. And then the following year, you could finish 20 of them, even though you didn't read 20. You see what I'm saying? So that's kind of like how the number got so high this year. It's because I'm like reading the second half or the last 1/3 of a few of them. Very few books I've started and completed this year. And the one I'm working on right now for number 20, side note, is You Learn by Living by Eleanor Roosevelt. Eleanor Roosevelt. That sounds familiar to you. She was a first lady to I think it was FDR, Franklin D. Roosevelt. He was the president that I think he completed 4 terms as president. and then ended the multi-term. It was like, okay, we got to limit this to 2 terms because this is too much. So she was the first lady to that president, and they focused a lot on personal development in their day. So little history lesson for you. All right, we talked about doing the small things because that's what builds discipline, right? Working out when you don't feel like it, taking a walk when you don't feel like it, making your bed when you don't feel, all these things, especially when you don't feel like it's better, I guess, if you do feel like doing something, but when you don't feel like doing it and you do it anyway, like that's what creates that discipline. Okay. We talked about reducing stimulation, like phone scrolling, and Seneca said to be everywhere is to be nowhere. So constantly changing careers, career paths, or trading strategies, all that kind of stuff. You don't want to do that. We talked a little bit on physical fitness, right? A weak body is going to equate to a weak mind, and that weak mind is going to be weak trading. Okay. Talked about going back to the basics, right? The successful traders trio. I said that earlier. Risk management, strategy, and psychology. You might be struggling in one area more than another, so you want to be able to go in there and get into the details of it, right? Go beyond the surface of things, go in depth. Okay. Talked about not being too hard on yourself when you get it wrong, because you're a student and we continue to learn. On the topic of being a student, right? Become a student again. Read books, engage with the material, engage with the live streams, right? Drop a like, drop 1s, 2s, and all that good stuff. Study the charts, annotate them, print them off, write on them, do what you got to do. And we talked a little bit about some risk management ideas, not all of them, but a few of them. And I think one of the biggest keys, if not the biggest key yesterday, was number 6. Was creating some non-negotiables, which are rules to limit your downside. Max number of trades, max number of dollar amount of risk per trade, daily loss limit, weekly loss limit, stuff like that. Oh, well, thank you for the correction, Cameron. I thought it was more so like that it was Jefferson or whoever that just stepped down after 2, and then all the other presidents just wanted to follow suit with that until FDR. But I don't know. I don't know everything. I know a lot. I don't know everything. We talked about weekly performance reviews, right? Every Saturday or Sunday, you can look back on your results, see what you did right, see what you did wrong. Try to do more of what you did right and less of what you did wrong. Right? Not judging yourself, to be objective, right? Detach from the need to put a label on things, value judgments on things, observe it for what it is, adjust what you need to adjust, and then repeat, the following weekend. He's not even from the US and got them fat. Well, we have ChatGPT nowadays, so it doesn't really count. But you're right. You're right, though. You're right. And one of the things too was small steps, not large leaps. What's fast doesn't last. What's slow will grow. Slow progress builds skill and discipline and patience, I would say. And fast progress builds ego. Okay. And the final additional commentary we talked about was to stop trading when you took 2 losses in a row in a day, or 3 trades in a day, whatever the outcome is, or when your profit goal is met, if you hit your max daily loss limit, or if you're just feeling emotional or can't focus. Okay. Now, here's the thing. If you're somebody who trades every day, or you trade a lot almost every day, and you start to implement rules like this, you're probably going to trade a lot less. And that may bother some people. But you don't want to be at the point like half of Twitter is. Don't trade no news Monday. Don't trade news Tuesday. Don't trade Wednesday. Don't trade Thursday. Don't trade Friday. Right? And it's like, well, okay, you never trade then. So you want to find that Aristotelian golden mean, the sweet spot between not trading enough and not trading at all. Like a happy midpoint somewhere for you that allows you to trade some, but not overtrade and not undertrade. Yeah, that's what I'm saying, Cameron. It was written into law after FDR. The being a president, dude, like that will absolutely wreck you. You should, matter of fact, if you guys want to Google this, let me see if I can Google it real quick. Side note. We got to do a lot of side notes. It's a free live stream. I just do what I want. But watch this. If you look up a before and after picture of Abraham Lincoln after the Civil War, bro, it's absolutely insane. So it's in some of the books that I've gotten, right? Now watch this. Watch this. Right here, okay? On the left, I think this was pre-Civil War, and this was after. And this looks like 20 years, right? We can all agree, bro, he probably looks, well, this is like the early 1800s, so he probably looks like 30, maybe 40 here, and he looks like he's in his 60s here. Can we all agree? This was like a 20-year difference is what it seems like, right? Chat, this was 4 years. This was 4 years. Not 5, not 10. This was 4. That's how fast he aged, bro. You know what else I know too? He becomes president, right? He's a minority president, and obviously, you know, Civil War starts to happen, and slavery is like a big part of it. And his son Willie dies at 11 years old. So he loses his son. He's the president leading quite literally a war within within their own country, within our own country. North versus the South. People are dying. Native Americans are starving. Okay, I won't forget the Native Americans, right? The government had like kind of effed them over pretty bad. Then the Civil War happened, so the government was like, oh, sorry, Native Americans, we got to have food for our soldiers. You're screwed. So a lot of them died as well. Don't forget that. Know your history. And, you know, a lot of mothers lost their son, right? And so he was dealing with them too. People would come visit him, and he would meet with them. And so your own son dies. Tens of thousands upon thousands of people are dying left and right. Your own people, both sides are American. He's got critics within the government, right, that are saying, oh, you suck, you need to be impeached, all this stuff. Bro, he was dealing with a lot. Okay, you thought your life was stressful? Okay, you should read about Abraham Lincoln. Okay, that was 4 years of aging right there. One of his more famous quotes too is pretty sad. He said, and I'm paraphrasing, he said, gentlemen, if there is a place worse than hell, I am in it. Yikes. And from the look of that after picture, yeah, he was pretty right. He was in a place worse than hell. So anyway, I don't know how we got here. Anyway, let's continue. You may not need more wins, but fewer stupid decisions. You may not need more of what's right. You may already be doing a lot of things correctly, but what you may need to work on is losing less, or losing less often, or hopefully both, right? Less stupid decisions. Okay? It's not about, like, let's say being wrong. You have to allow yourself to be wrong. You know, you'll take losses and stuff, but to over leverage, over trade, blow an account, stuff like that, that's the stuff you got to stop doing. Cameron, you're blocked again. Again, like you and me, I don't know how you guys keep coming back. I'm gonna have to fire my manager here. You can't over leverage your way to success, right? It's an issue of sustainability. And you can't revenge trade your way to success. You won't see consistency, which is also a sustainability issue. And we don't want quantity of setups. We want a quality setup. One good setup, right, one good setup is better than like 5 decent setups. Okay, especially if you can pyramid. I'm just reading the chat. Just give me a second here. Yeah, well, I mean, there's a reason he's one of the greatest presidents and probably the most accomplished president as well. I like Roosevelt too. Theodore Roosevelt. He did a lot as well. They both did. Well, Mason, I only read a short biography. I didn't read the other one. The other one that's like 600 pages, full pages, blocks of walls of text. It's too much. I can't do it. I mean, I can do it, but I'm not going to. All right, Jordan coming in with the tinfoil hat stuff. The only reason Lincoln died, bro, is because his dumb ass, well, he was a very smart guy. Let me back up for a second. But the dumbest decision he ever made cost him his life. He went to the theater against the advice of his friends. And the bodyguard that he did, I thought he didn't have a bodyguard. He did have a bodyguard. And his dumb ass, they should have hanged him, honestly. But the security guard wanted to get a better view of the performance. So he like left Lincoln and went to like a balcony or something to get a better view. So yeah, Lincoln got shot in the back of the head on the left side. And he didn't, I don't think he died immediately. I think he died at like 7 a.m. the next morning or something. So the need for Secret Service, you know what I mean? So who knows what else he could have gotten done. You got any more than PDFs? I do have PDFs. I don't give them to you though. It would be better if the market ran higher, but it would be better if you took your own notes so you actually get them. Listen, don't get me started on Roosevelt, bro. On Teddy Roosevelt. I will literally talk for like 3 hours, okay? So don't even get me started, Cameron. See, I told you guys to behave and y'all want to get in my chat and act like y'all just want to be rambunctious. Low resistance bodyguard, yeah. Yeah. Yeah, it's sad to see. I mean, it's almost like I'm watching this too. I marked this up before we got here. I mean, you quite literally saw it already because we've been here the whole time. But this here's the first presentation, and these 2 up candles I'm looking at to be a potential reaccumulation. So what I don't like about today personally was the speed of things. I don't think we should have retraced as deep as we did here. I don't think we should have done that. I don't control the markets though. So it's not up to me. But the reason, okay, that I titled the stream the way that I did, I wanted us to be here by now and we're not. So again, I don't always get it right. But the first principle, okay, the most basic idea for me, okay, if I had to sum it up in one sentence, right, it's not supply and demand, okay? If I had to sum that up in one sentence, it's that price is too predictable and turning points are too precise to consider a free market. It's not a free market. It's just not a free market. And because it's not a free market, I don't believe that the market is supply and demand. Okay. Now, I will tell you, the exception to that obviously is commodities. Okay, oil, all the commodities. Okay, even like the metals and stuff like that. I would even say food stuff. You know, corn, wheat, sugar, orange juice. Yes, on a grander scale, on a macro perspective, yes, there is real supply and demand because there is actual consumption of a product. Like, do you remember? Y'all remember a few years ago, oil went negative. It was right after the lockdowns began in the US, like what was that, 2019, 2020, something like that. And so when the lockdowns began and all the sheep, I mean people, you know, started to stay inside and wear masks and all that stuff, as a society together, yeah, we stopped using as much gas, oil and gas. So if production stayed the same, but nobody's actually buying the gas and using it driving, then yeah, the actual supply does increase, therefore sinking price. That's a real thing. Supply and demand in commodities is a real thing. Okay. Now, when it comes to day trading or like say even swing trading, for example, I don't believe that, you know, that buyers are stepping in. I don't believe, you know, stuff like that. I believe it's purely algorithmic. And you're either on side or off side. Does that make sense? Drop some twos if that makes sense. You may not agree, but it's still my point, my opinion rather, can still make sense, right? So when we talk about how this stuff is too precise to be a free market, okay? It's stuff like this, and it's stuff like this, and it's stuff like this, which again, we still haven't actually ran the highs yet. But still, if you take a chart, okay, and obviously multi-time frame analysis is going to be better. When you look at a chart and you apply the details of it, the timing aspect of it, the concepts of things, right? Bodies, wicks, stuff like that, inversions, all that stuff. Even the framework, right? Like the market maker buy model, the sell model, what have you. When you see the details of that, right? And then so today's the 18th, right? When you see that on the 18th, and then you see it tomorrow, and you see it on Thursday, and you see it on Friday, and you see it every single day, you get to the point, I mean, it shouldn't really take more than, honestly, like 3 days, okay? When you see that sort of precision, it's just, it's undeniable. You know what I mean? Like, that's the point I'm trying to make. Again, I know I've been saying this the last couple months. It's not to be an asshole, okay? It's not to be mean. It's not to start a war or, you know, to say I'm the best trader out there. It's not for any of that. It is. Remember earlier we talked about suspending value judgments, you know, and looking at the information for what it is. Okay, whether you took a loss today, whether you took a win today, whether you took no trade today, whether you took a break even, whatever. What we're looking at is purely information. That's why the background, that's why the well, not the colors, but the background, the text, and the colors of the candlesticks and the wicks are not colored. There's a reason for that. Okay, a long time ago, we're probably going to consolidate forever and never run these highs. A long time ago, when I read Mark Douglas and Paulo Webb, and I don't know if it was in the Disciplined Trader or Trading in the Zone. It was in one of the two, or maybe it was even in the Complete Trader. I don't know, but at some point there was a subject that I read, and he says the market is information, and information is neutral. It's not good or bad. Open, high, low, close is exactly that. It's just open, high, low, close. The timing is exactly that. There's nothing inherently good or bad about noon, about 12 o'clock. 12 o'clock is just 12 o'clock. You know what I mean? Price is just price. That's what it is. So when you look at information objectively, we're not looking for longs, we're not looking for shorts, we're not looking for any of this stuff. We're just looking at price, okay, as it relates to, time, right? We're looking at price as it relates to time and context. Time is the easiest because time is always the same. It never changes. Price are like, say, the concepts and stuff like that. That's a little bit more difficult. You got to know what a mitigation is. You got to know what an imbalance is, what an inversion is, and stuff like that. The hardest part, the most subjective part, and the part that a lot of people disagree on is the context. That's where you see a divergence between a lot of people's opinion. Well, it's algorithmic. Well, it's supply and demand. Maybe it's both. Maybe it's fucking neither. Okay? And this is where all of us have our own opinions, right? But the two things you could never argue, you can't argue time. It's always the same. I don't know why you guys keep retracting your messages. I don't know what's going on. And you cannot argue price. Okay? You can listen to anybody you want to. You can get all the context in the world from everybody. Right? The market went up because of this. The market went down because of that. The market consolidated because of XYZ. Okay? That'll always be a thing. What I'm telling you is, if you want to, okay, ignore the context and simply focus on the others. When you're studying price, simply look at time and look at price. And don't worry about context. And if you were to look at those two things right there, time and price, time and price, time and price, time and price, you'll get to the same conclusion, or probably will get to the same conclusion that I did, which is it ain't supply and demand. Okay? So do you guys want to get into some more details here? I know I've been talking to you for a little bit, and we went on a small, short rant on a little bit of history on Lincoln, but again, like I said on Instagram, I've had a lot of caffeine, okay? So I'm like everywhere, okay? But I'm trying to get back to the main point. Trying to keep the main thing the main thing. You guys want to get some more details? I don't even know what the other markets are doing, but so let's go out for a second. Let's go out. Let's zoom out. All right. When in doubt, zoom out. Now, one thing that I really don't care for about the last let's say month and a half, 2 months, ever since like FAFO Friday, that Friday the 10th, ever since then, what I don't care for is stuff like this. These long wicks like that. The reason I don't like those is I'm usually not the best when it comes to like timing of the run. Like, okay, you take Friday's low, for example, right? And then that Thursday we trade lower, right? We get into this imbalance, and then like Monday yesterday, it looks like, oh, hey, it's going to go for that low. And then it doesn't do it. But then it does do it today, right? That's why last night I was telling you, like, oh, we finally got, I think it was 66.55, but we did it at such like a weird time. It was like 10 p.m. or something. It was like, ugh, right? Oh, Solo, we gotta not do that. we gotta not do that. It wasn't a false mitigation that nuked your shit. It was you who nuked your account. It wasn't the market. It was you. The market will never do anything you don't allow it to do. But anyway, if we go to, not that, regular, there we go. If we go to the regular trading hours, okay, which you'll probably see something very similar in SPY and the triple Qs as well. This is what I said in the Discord earlier today, was these are here. These two right there. And this morning, right, because we opened up at like 66.50, something close to that. And we start, you know, trading lower, and it looks like, hey, it's fixing to get ready to yoink those, right? See, that's what I'm referring to, that 65.89.5 level. That's where I got that level from in the Discord. Okay, that's why I figured earlier today that it was actually like right in here. I was saying, okay, and this is why I tweeted this. If it's manipulation, if that's manipulation, what manipulates mitigates. We would need to see if that's going to be respected or not. If it's not respected, that's why I said we may start printing some fat down candles, because it may want to trade lower and go for that 65.89 level, right? As if it was like an engineered low. However, it doesn't have to, because NQ did. So NQ did trade below the lows respective to the one I just showed you on ES. So this here is potentially accumulation. So if it is accumulation, right, what ingredients do we need? If we're going to make a pie, or, well, I don't really make pies, but let's say cake, for example. Everybody likes cake. If you don't like cake, bro, you're a liar, okay? And you need ingredients. And then you got to cook it, right? And then you know what to expect after you pull it out of the oven. We have ingredients here. We have original consolidation. We even have equities opening range high. We have manipulation. We got our first leg, and then this mitigation starts the second leg. Right? And I told you earlier, this was our first presentation. Look where price is not going. It's not going to the lower half of that first presentation, is it? Not yet. I'm still waiting for this to run the freaking highs. It's just, the market knows, like, when, you know what I mean? It's like, okay, you know, John's got this buys and he goes live here, so, you know, we're not going to do it. But my point is, once we trade through it, right? Look where price is not going. There's your midpoint. There's your fucking highs. Okay? It ain't fucking supply and demand. All right, sorry. Again, I've had a lot of caffeine. I've had a lot of caffeine. I'm sorry. Okay? That's the lower half right there. That is the lower half of the first presentation. Okay? So this right here should be enough to tell you that it ain't fucking supply and demand. Okay? Right here. Look at this. This is the first present. This is 832. That's the first presented imbalance. Okay? Now watch this. Trades back into it, gets above it, trades below it, and it becomes an inversion here. Well, yeah. It's either an inversion or reclaim, but it was never really bearish and then redone. So I would say this is an inversion. I could be wrong, but we're going to move on. It becomes an inversion here to go lower, right? And then watch this. Watch this. Hits that. Trades lower. Okay? Watch this. Trades into the midpoint to go lower. Trades into the upper half. Back to the lower half. Trades through it, right? Trades through it right here. And then look at it. It never goes. It never goes. It never goes in the lower half. It remains bullish. Bam. Until what? The highs that we talked about. The highs that we talked about. Look at that. Okay? Now let's come back for a minute. Let's come back. Okay? The framework, okay? The framework Market maker model. Market maker model. We talked about this earlier before we even got the highs. We talked about this, right? Original consolidation. Equities open. Liquidity. Oh, equities open in range liquidity. Distribution. We don't really get like a redistribution. I mean, we could argue that, yeah, this is a redistribution. There's your manipulation, right? I would say that's the low risk buy. This, again, is why my personal opinion, I didn't want to see that. I did not want us to trade all the way back to this. It should have been a breakaway, in my opinion, right? How is it not supply and demand? Well, there's number one. Okay. First presentation is bullish. Okay. Or I don't know about now, but once those highs have been met, I don't care. But okay, that's not supply and demand. This right here, okay, same thing. I keep telling you, the first imbalance in a reversal, the first imbalance in a reversal is typically a breakaway. Now, the breakaway should be left open. If price does trade into it, we talk about this all the time, where shouldn't it trade to? It shouldn't trade to the lower half. And it can, okay? But look at this, okay? Look at this. This is price. This is not John Fib, okay? This is not my measurement. This is price. Look at price, okay? Look at price. The midpoint is what? Let me take this off. What's the midpoint? 66.1475. Okay, look at this. Here's our magnet tool, and it's snapping to that high. Here's our magnet tool. It's snapping that high to this low. Okay, the midpoint is 66.14.75, right? We can all see that. There's this damn midline is on here too. Sorry, let me get rid of it. Okay, 66.14.75. That is the midpoint of that imbalance, right? Look at the low on this candle. Right up here. Right up here where it says L, right? Open, high, low, close. Look at the low when I hover over this candle right there. 66.14.75. It hits that perfectly. I guess the wick right here, I guess that really counts. It hits that perfectly. And it leaves the bottom half open. Okay, which is what? Bullish. Once we pretty much printed that 835 candle at 8, I think it was 1139. I told you, hey, we just created an intermediate term low. London's highs are probably on the table now, or probably back on the table. So what do? Traded higher, and then what's that right there? What am I tweeting right fucking here? Low. Look at this. Low, high, higher, low, right? Low, high, higher, low. Formations can still function like a mitigation. That up candle right there, what does it do? What does it do? It functions like a mitigation. Does it not? Does it not trade right into that and off of it for the highs? Come on, bro. Look at that. Look at that. Look how much it trades into that. Look at that right there. Does it trade to the lower end? No. No, it doesn't. It leaves the lower half open. Look at that. Look how perfect that is, bro. Oh, it's not perfect, but it's very close. The breakaway leaves the bottom half open. This, it's not a mitigation, but it functions like one. Okay. That can still function like a mitigation. Does it leave the bottom half open? Yep. Inversion, first presentation. Does it leave the bottom half open? Yep. And what does it trade to? Those highs. 66, 86, 86 if we round up. Did we not talk about London's high? Did we not talk about London's high today? Which high? Asia high? No. Pre-market high? No. No. We talked about specifically London's high. That's where context comes in. Okay, now watch this. We're not done. Well, I'm not done at least. Let me clean this up a little bit, because if you have not had fun yet, you're about to. Okay? 1240, not quite a macro. It's disappointing. It's disappointing. Okay? But if we do measure our macros today, we'll go down to a 1 minute so we can see a little bit more clearly here. When was our low of the day created? When was our low of the day created? Right here. This is our macro. This is that macro from earlier. This is the 10 a.m. macro, which is 9:50 to 10:10. And our low was created at 10:03. So our open of the hour dropped lower. That was the manipulation, right? And even on like a short-term mitigation here too. Look at that. Look at that. So our TP was not met during a macro. We can't do anything about that. But our low was set during a macro. That was our accumulation because we did not trade below the old lows in the way that, NQ did, right? So manipulation was after that, low risk buy, first leg. And again, the mitigation here sets that, once we rallied, it set that intermediate term low. So after that, okay, yeah, that should support price. That should support price. That's what's real support and resistance. It should support price because it's algorithmic. It's algorithmic. We have images that were screenshotted years ago. And price is respecting those same frameworks, the same concepts, the same tools. You get me? It's too precise to be a free market. This is not a free market. So let me catch up on the chat. I wanted to make sure I got all that out there. I wanted to make sure we got it. Okay. Framework. Market maker buy model. Consolidation. We left it back into it, left it again. So okay, that's going to be left open for a while, but it's coming back for that. Okay. That's how smart money operates. And it's a, it's a hedging program. In essence, it's a hedging program. I'm not going to get into all that, but what you need to know is this is why that stuff works, because this is how smart money operates. Okay. Anyway, consolidation, left it, back into it, left it again. That'll be left open, but it's coming back for that. We create a short-term low like at 9 o'clock. We rally a little bit, get people thinking, oh yeah, that's the low, right? Nope. We trade lower below that and then immediately away from it. Now, what do you see with this run higher here? What do you notice about that? Is there anything interesting about that? Besides the first presentation, besides that, what else do you see? Has it given you any signatures? That's a big run, John. Right. What is it trading towards? London's high. Down to the low that's been set. What has it crossed? Okay. My X's crossed me. But price crossed 50% on that run higher. There's your sign. There's your sign. There's your little tip of the hand. Tip of the hand. The dealer's telling you, hey, dealer, I got 16. Dealer has to hit on 16, right? I think so. And you've got what? I don't know. Something. But you think the dealer's going to bust. So anyway, you know the cards. All right. You know what's going to happen. Are we going to buy in a premium? Well, you can buy in a premium, but not after, or excuse me, not before it comes back into a discount. So it has to come back into a discount. It offers discount longs here. Okay. And that is where that mitigation is here. And I kind of tweeted that beforehand. What manipulates usually mitigates. But again, the reason I didn't like this and the reason I didn't want us to trade all the way down there, number one, was because of that body here. But it was also because of the 1 minute. Okay. If you really look at it, I don't like when we do this. If it's like 2 or 3 candles, I love that. When it's like this and the mitigation ends up being such a large range like that, I don't like that. I really don't. I just don't care for that. But again, it's not what I want. It's what the market is going to do. So we don't buy in a premium until after it's already been in a discount. Okay, so there's your discount longs again. Because remember, your low risk buy is here. And it does come back for that. But I don't know if LaSavage is still here, but I know you've only been with us for, I think, like maybe 2 months now, maybe a month and a half. Not quite too much because you're still the bronze or brown color. But when we trade a mitigation, or if we trade an imbalance, if it's a breakaway imbalance, the stop can go at the low end of it. Okay, or it can go to the low of the mitigation. I mean, the low of the manipulation, or potentially the low of the mitigation. Okay. Now, if you traded the low end of the, I mean, if you put your stop at the low end of the mitigation, this would have stopped you out. If you put it at the low end of the breakaway, that wouldn't have stopped you out. If you put the stop at the manipulation low, that wouldn't have stopped you out either. Okay, so hopefully that helps you in that regard. Once we got back into a premium, okay, the 75, like the upper quadrant to the midpoint, that becomes the discount end of the premium. That's why you can buy in a premium, okay? If you don't know how to buy in a premium, that's okay. But don't tell other people not to buy in a premium because you don't know how to, all right? Respectfully. You can long that. You can long that. Right there. You see that? Now, to be fair, when I tweeted that, it was like probably a minute or two after. You see that? You see that? And then our macro 1150 starts. We trade down candles in here, imbalance to go higher. And then everything else I already showed you earlier. It's pretty cool shit, huh? All these let's come back to what I was saying earlier. And this is why, again, the title is how it is. Because how can a person, anybody, I'm not trying to single anybody out. I'm just saying, like, in general, anybody in the world, okay? How can you look at the low being made inside of a specific time window, imbalances leaving the lower half open? Not a mitigation, but it functions like one. It's like a mitigation version 2, basically. Leaving the lower half open. And then the first presentation also, once we leave it, it's also leaving the lower half open. I never learned any of that shit in the first 5 years of me trading, from 2014 to 2019. I'd never heard of that. Never. And I took a lot of courses. I watched a lot of YouTube videos. And I listened to all the supply and demand stuff. And not a fucking person ever told me that. None of them. Not a soul told me that. But yet, these algorithmic principles or smart money concepts, yet these are specific. And they're very precise. They're very accurate. So how can it not be algorithmic? Our whole world is ran algorithmically. You've got traffic lights that are on a timer. There's some traffic lights that have they have, you know, those, if you ever pulled up to a light before, or like a gated neighborhood, there's a small square, or not square, sorry, rectangle outline on the ground. It's very faint. It's hard to see if you're not looking for it. But there's a rectangle box near the front, right near those lines at intersections. Under that is weights or whatever. It's a scale probably, because it's detecting whenever a car pulls up. And so when it detects that, like, oh shit, there's somebody waiting, and then they can change the light to allow that person to go, you know, provided certain parameters, right? It's algorithmic. There are ambulances and probably fire trucks, but I know, because an ambulance almost fucking killed me a few years ago. An ambulance can pull up to a red light, green light, yellow light, whatever, and they have a button that they can press on a machine, I think it's a machine that sends a signal out to the light box or whatever that allows the light to immediately change. Okay, we'll give them green and fuck everybody else. That they almost smacked, like literally they almost killed me, bro. I almost had a T-bone directly with a ambulance, but they would have killed me, like dead ass. But anyway, I'm glad I'm still here. It's been fun. Our world is built around algorithms. You ever been in the car, not on your phone? Yeah, probably not. But you ever been in the car and you ever talked about certain things? Hey man, it's getting cold outside. I think I need to buy a leather jacket. Yeah, you should probably get one, bro. All right, let's go smoke weed now. Okay, whatever. And then you get home and you're scrolling through Instagram and now you're getting ads for leather jackets. Right? Am I wrong, chat? Have you never had a conversation before? And now you're the same day or within a day or two, now you're getting ads for the very things you were talking about. Has that never happened to you? Drop some threes in the chat. Did we do 3 already? I don't know what number we're on. I think we skipped 2. Drop some threes in the chat if that's happened to you before. Seriously, if that's ever happened. These companies that run ads, these ad agencies and stuff, they're all up in your shit. Google, more than anybody, is all up in your shit. Okay? Like this microphone, for example, when my computer is on sleep or it's off, I know it can still pick up what I'm saying. Which is why I try not to say certain things around, microphones or even my own phone. Your phone probably does it too. And it's recording or at least, hearing what you're saying. All the Alexa machines and all that stuff too. Not to put my tinfoil hat on, but it's all algorithmic because they want to feed you ads so you buy their shit. So companies spend more on ads so they make more money, right? It's all algorithmic, bro. Everything's run on an algorithm. So computers and algorithms. When you scan the barcode or the QR code or whatever to check out your groceries, it's all computers and algorithms. So when it comes to financial markets, do you think the people that are actually in control, again, we'll never meet them, we'll never know their names or what they look like or who they are, we'll never know. Okay? I guess it could be the Rothschilds, but it's probably way, way beyond them. Okay? Do you think that they would allow the world to trade like financially? Do you think they would allow that to be free? Seriously, do you really think that would happen? When rules are not in place, there's chaos. Okay? I forget the opposite word. Structure. Yeah, if there's no structure, there's chaos, right? The markets have to be structured or they would be chaotic. And a lot of people think, yeah, the markets are chaotic. They do whatever they want. No, they don't. They do what I fucking tell you they're going to do. I'm just kidding. They follow certain rules, market maker models. They follow certain times, macros. They follow certain contexts like, hey, those people that are short have their stops here. And the market is going to trade for that and for that liquidity because it is designed to do that. It is coded to do that. The mitigation is coded to do that. The algorithm references price levels as it relates to time. There's your equities open liquidity. That is a pool of liquidity based on a price at a specific time. It's the highest high in the first 30 minutes. The highest high of London is right there. And that's just so happened to where the market goes and then trades back into the range. That's free. That's fucking random. No. This stuff is not random at all. This is not free. You know what free people do? They fucking burn down cities, bro. Look in the US a couple years ago. You know what free people do? They build cults. of these wild religions and flying spaghetti monsters, and you get shit like, you know, drinking the Kool-Aid. You know where that term comes from, right? Don't drink the Kool-Aid. There's a sinister story behind that. Go Google it. People believe all types of weird, wild shit. Okay? People form groups that are, let's say, racist. You have the KKK, for example. People do wild things when there's no structure. There's chaos. You don't see chaos in the markets. You see structure. And I'm not talking about break of structure. Break of structure is honestly bullshit. Most of it. It's bullshit. Okay? I think it's the most overrated concept there is. I'm talking about structure with rules and time-based ideas. Okay? Can I end my rant with that? Is that okay? It is not chaotic. It's not random. It's not free. It's not. If it was random and free, I would be wrong half the time and I'd be right half the time. It would be like a coin flip exercise. If the markets were not predictable, then yeah, we would have roughly a 50% right or wrong. But yet, if you were to wait for certain criteria, wait for manipulation and trade after that, or trade the second leg of accumulation towards low resistant highs, you will get a higher win rate than 50-50 because there is actual structure. It is not chaotic. And if it's not chaotic and it's structured, it's controlled. It ain't controlled by me. It ain't controlled by you. I don't actually know who it is or who wrote the algorithm that does this. I don't know. All I know is if we look at time, if we look at price, the context is subjective, but it makes sense though, doesn't it? The mitigation is to allow smart money who is currently short, if they are still short after this run here, this is their chance to get out of shorts before the market goes higher. Has that ever not made sense to you? I don't know if Michael wrote the algorithm, bro. Maybe he did, maybe he didn't. I don't know. I think he's talked on both sides of his mouth for a long time, so it's really hard to know. Again, there's a lot of things I can't verify. There's a lot of things I can't verify. I never met him either. We've had some interactions before. The dude's a fucking asshole. But and he's off his rocker 100%. That dude is not okay. He needs some help. But there are certain things that he has discovered in price, or at least knows of and has shared with the world, we could say, in the trading community. There's a lot of stuff that I use from him, of course. I've never hid that. I literally told you about market maker models. It takes one search in Google to figure out who that came from. I never hid that, right? It's algorithmic principles. Does it not make sense? If you're short from up here and the market goes lower and now it's coming back to your entry, but then the market goes your direction again, isn't that a good time to get out of your short before it goes higher? That's context, right? That's the way it was explained to me. That's what a mitigation is. That's why it has that function. Okay? But again, I say this all the time, chat. Who are you going to go to? Who are you going to ask? Jerome Powell? President Trump? Elon Musk? Your mama? Who are you going to call? Ghostbusters? Hey, Ghostbusters, can you verify that this is a mitigation? Because, you know, smart money needs to mitigate their positions that are otherwise going to be underwater when the market rallies for the second stage of accumulation of a market maker buy model. Who's going to verify that for you? Who's going to tell you, yeah? Matter of fact, who has the authority to even tell you that? Right. This is why I keep saying, this is the last thing I'll say, and then we'll end it for today. This is why I keep saying, context, that's where we can agree to disagree on certain things. I believe this, you believe that, whatever, who cares? Okay? As long as you're trading and you're trading well, who cares? Okay? At the end of the day, my biggest point for everybody is just look at time and look at price. And you can't deny that there is structure here. You can't deny that this is a chaotic, random, whatever happens, happens kind of market. It is not that. Crypto, low cap crypto, yeah, that might be some Wild West. I don't know, okay? That stuff, I guess, probably can be manipulated, like heavily by whatever. But when it comes to index futures, when it comes to Forex, no. This is entirely controlled. How could it not be? Anyway, I think I've made enough points for today to understand that it's algorithmic, man. So with that, y'all be good, be blessed. I think we peaked at like 70 something viewers today. I think it was like 72 or something like that, which was cool. So yeah, if you guys don't have any questions, that's going to be it for Tuesday. I'll put out a market view later, but you guys literally have access to these tweets too. You can put them on your chart. I give this stuff to you. I give it to you. I hand it out like it's candy, like it's Halloween candy or Santa Claus, bro. And if any of you say I look like Santa Claus, you're getting blocked. You're getting blocked. I am handing this stuff out to you, and I'm literally tweeting certain things, and you can just put that right on your chart. What manipulates usually mitigates. Well, there's mitigation, there's manipulation. Does price come down into that and rally? Yep. What about this tweet right here? Low, high, lower, low formations can still function like a mitigation. Do we have that? Low, high, higher, low can still function like a mitigation. Bro, I'm giving you guys tools I never got. Never. Growing up in trading this way, I never got that. Never. I eventually had to start doing this on my own. Okay? And thank God for the feature, for the tweet feature. TradingView took it away for a long time, but you guys can't see because my camera's probably right there. But right here, there's a tweet. Okay? And you can put my tweet, you can put other people's tweet, you can put Jim Cramer's tweets on here, and that will show you some crazy, crazy things. All right? So that's my rant for the day. That's my spew. Hopefully you learned something. Seriously, I don't come on here just to like rant for no reason. I mean, I do have fun with it, but there's at least a purpose to it, okay? Can you guys at least appreciate that? Y'all be good, man. It's Tuesday, right? Yeah, I'll see you Wednesday, tomorrow. Same time, same place, same price. See ya.
Нету ни берега, ни дна. И разошелся, как письмо в воде. Солнце сквозь облака, как вина. Что осталось горькой на чьем-то столе. Я не зову некого звать. Тени молчат в телефоне.